This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's finally a Friday. End of the week. We are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surabhi and Nigel. Morning, guys.
Good morning, guys. Smiles couldn't be wider, right? It's a Friday look. We all wear it no matter what. Markets can go up and down and all-time highs can wait. But it's a Friday. That's what matters.
And next week's the truncated week, as I informed you earlier as well. And I'll tell you, Prashant, it's going to be extra special because our co-anchor is going to be celebrating her birthday as well. One day before that.
So the treat is on Tuesday.
Oh,
absolutely.
God.
Or Thursday.
The treat is on Tuesday, and
Tuesday?
we can celebrate. So I just thought
Wednesday's a holiday, right?
That. Absolutely. You're making it more interesting now.
So Surabhi, happy Thursday and happy Friday now. So
Yeah, it's happiness all the way.
all right, well, will the markets be happy? That is the question, right? And I think let's kind of lay out the cues as they lay for you this morning. Yesterday, by the way, once again, we faced selling at all-time highs of 18,888, 87.60. So I'm rounded that off to 18,888. So, I mean, this is not the first time this is happening. We got to, by the way, the closest we have so far till the all-time high, which was last made in December of 2022. We came within 1 point of that. Now, overnight, we got some supportive cues. Basically, Wednesday's selling was completely reversed. So it largely came through from the tech universe, tech stocks in the US. So NASDAQ actually was the biggest gainer. It ended about 0.95% higher. But the Russell is still underperforming. Market breadth was 2:1 in favor of declines. So this is a kind of a divergence which we've pointed out almost a month ago, which still continues. There were some hints, some evidence that the market rally in the US is broadening out, but that is kind of stalled. So while, S&P and NASDAQ are higher, will that feed through in any significant way? We'll see. The Bank of England surprised. It was a shock hike of 50 basis points. Yields in both Europe and US reacted very significantly to the Bank of England decision, but then it cooled off. But the 10-year in the US still ended about 8 basis points higher. The other significant price change from global markets worth noting is oil, which is sold off 4%. And this is Brent oil, which is now back to $74. I don't think anyone will complain, of course, India being a very large importer. Now, just to go back to the Nifty, so signs are there that maybe the market is kind of distributing at higher levels and there is some selling which is starting to emerge. But I would say that because the thing to do to make money if you're a trader intraday has been to try and buy the dip, and it has worked for so long, without kind of writing off that the market's finally turned and it's heading lower, I would say we perhaps need a little more confirmation to kind of say conclusively that for now maybe the uptrend is turning into a bit of a pullback. And how will we confirm that? A break below 18,660, which is about 100 points away from where we left off yesterday. 18,660 because that is Tuesday's low. It is, by the way, this Tuesday's low. It coincides with last Thursday's low. It also coincides with the 20-day moving average. All three kind of converge at that 18,660 levels. So you get a sort of, break below that, a close below that, and I think then we will start to talk about perhaps a more deeper, meaningful kind of pullback. Otherwise, it just may be limited to, a couple of days of sideways, slightly lower kind of price action, and the market pulls right back. Something which we saw with the Nifty Bank, which, again, like the Nifty, came within, I think 1 point or something, and then, sideways for a week and a half before making a new high and taking those highs out. For the Nifty Bank, for now, it's looking like a slightly more corrective pattern. The 40-day exponential moving average for the Nifty Bank is important. That stands at 43,498. And that is the level which we need to watch out for. On the way up, 44,042 to 44,083 is the resistance zone, the resistance area, which I think the Nifty Bank needs to take out. So those are levels, very near term. I would again say, and I've said this mostly all of this week, watch for the first hour and a half. The market is giving you signals that maybe it's getting a little tired. Even if, and on days like, when it looked like perhaps we could hit the new high and take it out, even on those days it's looked a little tired. It's not been a euphoric, strong push through those levels to take out, the high. So watch for the first hour and a half before you decide what to do. The SGX is indicating a 15-odd point lower start. The other sector to watch is the IT services sector. It was under pressure yesterday. Accenture reported numbers, and I don't think that does anything for the IT services stocks. At least from their guidance, it looks like they're expecting demand for IT services to be a little muted. Surabhi.
Well, Prashant, absolutely. In fact, I was looking at those numbers. I'll come back to Accenture in just a bit. But first up, the Asian picture. We'll pull up the Hong Kong Hang Seng for you. But markets around Asia are down. China is, of course, shut. But even Japan, Singapore, most of these markets are down over 1%. And the mood seems to be a little somber because central banks have, put out their message loud and clear. And the message is, we are not done yet. So markets around the world that were hoping for a nice, easy-peasy second half, maybe some rate cuts thrown into the mix, a nice end to 2023, that seems to be now getting priced into the reality. And those rate cuts are getting pushed off the table, at least maybe for this year. It's not a done deal yet. It's very, very clear. So what happened yesterday, Prashant alluded to this UK hike that we got. It was a bit of a shocker for the markets because the expectation was 25 basis points, that too with just a 60% probability. What was delivered was 50 basis points. So it was a loud blow coming in. And perhaps you can't blame the BOE, right? Because inflation is running red hot in the UK. The last print, CPI print, was 8.7%, with core inflation, in fact, accelerating month on month to over 7%, 7.1% core inflation in the UK. And the BOE was like, markets can want what they want, but we need to look at bringing inflation lower. What did the Swiss National Bank say yesterday? Now, SNB's hike was on an expected lines, 25 basis points. But once again, in the commentary, the Swiss Central Bank again reiterated that more hikes will probably be warranted as we look at the rest of the year to bring inflation down, to ensure, quote-unquote, price stability. So central banks are not done yet, and that's getting priced in markets pretty much around the world. Of course, Wall Street had a bit of a flip up, last night. But if you go back to the larger point, for India, Prashant, also why perhaps Accenture is not the best headline to have, and even TCS, by the way, is because IT has been the outperforming part of the market this week. And IT has done really well. I mean, just incrementally, we started seeing accumulation at lower levels, but now, comes in this. So, okay, just a quick word on Accenture. The revenue for the quarter gone by was up about 3%. The US revenue for the company has fallen to a 3-year low, just the pace of growth. It's down to a 2% growth in the US. And Accenture is also saying that small deals are getting withheld, clients are holding back. So it's commentary that we have heard before, from the Indian folks. The outlook is growth of 8 to 9%, full year outlook, that is in local currency terms. Now, what was I saying on TCS? This is a Mint report right now, and of course, we are awaiting independent verification. But it seems like there's a whistleblower who's gone on and written an email to the top management saying that there is a bribes for loans, scandal, quote unquote. So, 4 employees have been sacked as per the Mint report. So anyway, the headline, the sentiment is not very, very positive on IT as we start off. The Nifty IT, as I was saying, was up almost 1% this week, outperforming the Nifty, which is why this news, let's see if it starts triggering some sell down over there. So we'll have to watch out for IT. This was a strong pillar of support till now. And today the news flow is not very positive. Flows are mixed. FPIs were net sellers to the tune of almost 700 crores. The domestic institutions bought about 200 odd crores. And finally, for the week as well, this is a week where the mid-cap sentiment at an index level has been sobering. You can't take away from that. And let's see if we have more of that or not. Individual stocks are still flying, but at an index level, the Nifty is down 0.3%. The outperformance gap between the Nifty and the mid-cap or the micro-cap and the small-cap, that is depleting. Look at the Nifty small-cap, flat for the week. The Nifty mid-cap is barely flat, 0.2% higher. Micro-caps are still flying. But I guess, Nigel, safe to say that overall the sentiment is cooling off a little bit. And maybe not too bad because it's been a fantastic mid-cap party, right? So maybe just a breather, take in some air, drink some water, and then come back for round 2.
Yeah, good you mentioned water, given that it's a Friday. But, yesterday we almost got there, right? We were within a point of getting to those fresh all-time highs. So the Nifty is trying, but not yet succeeded, though it still appears a matter of time before we get there. Those are the last 5 days highs, so close, in fact, to hitting that 18,888 odd mark. But make no mistake about it, yesterday was a Thursday. So part of the fall that we saw in the final hour of trade was because of the expiry-related factor. Just take a look at that. The Nifty, lowest point of the day, the final tick. The Nifty Bank as well, lowest point of the day, final tick. Normally we see sometimes, On the next day, some part of that underperformance or outperformance gets reversed. So let's see whether or not that happens today. But the Nifty's got a task on its hands. I'll tell you why. Because today is a Friday. It's going to be ending the week. And we need to put in close to around 55 points if in case we need to maintain that winning streak. The last 4 weeks, the Nifty has been higher. Now to get it to 5 weeks in a row that we're likely to end higher, then we need to put in 55 points for today's session itself. So record highs can wait, but you want to maintain this record at least. You know, the 5-week winning streak is hopeful. That's at least what the bulls will be looking at. The last time we saw a 5-week winning streak was in July and August last year itself. My colleague Hormoz, in fact, was helpful enough to tell me about that. The last time we saw it was in July as well as August. So 55 points, those are the runs that we need to get today to maintain that streak. What do the FIs do? They added more longs than short positions in yesterday's trading session. And I'll tell you what, we're missing their shorts in the system because now the markets are net long. If you had more shorts in the system, we would already been at those fresh all-time highs. What are the levels we're looking at? 18,660, 20 DMA, the lows that we saw in the past couple of days as well. So that becomes the important support. Till we're holding on to that support, you need to be long on the index itself. Once we breach that support, then in fact, we'll review that. Resistance, 18,920. I'm going by the options data. And around 18,920 odd should be a bit of a resistance zone. For the Nifty Bank, well, it's still stuck in a range between the 20 and the 50 DMA. You're hoping that, in fact, on the downside, the 50 DMA continues to hold out. Multiple times we have gone there in the last couple of weeks or so, and we have held on to that mark. So 43,450 needs to hold out. If that holds out, then you're optimistic that we finally get past that 44,000 odd mark. For starters, the SGX Nifty is now indicating a bit of a flattish to a mildly negative start. We could dip a little bit more, I think so, but you need to remain long on this index and hold that 18,660 odd. Task on the hand is today is to maintain that 5-week winning streak. So let's see how this goes.
All right. Well, we'll see how that goes. And, it's going to be a flat start if SGX is anything to go by. Let's get you what some views we are getting. So this is on money markets. Lakshmanan V of Federal Bank says the dollar index was seen pricing in the U.S. Federal Reserve Chair Powell's hawkish testimony. 50 basis point high from the Bank of England and Norway Central Bank each, and thus breached 102 levels briefly, resulting in the pound and the Canadian dollar trading the highest levels this year. He says the rupee finds itself caught between weakening US dollar and declining Asian currencies, particularly the yuan and the yen, which are trading at the lowest levels of 2023. He anticipates the dollar-rupee pair will trade within a range of 81.68 to 82.35 during the next few trading sessions.
Okay, and on bonds, Lakshmanan V says the bond market has moved from consolidation zone of 6.95 to 7.05% after the Fed indication of further hikes. He says global central bank action has delayed the possibility of rate reversal by MPC by at least 2 quarters, thus adding to the bearish sentiment. He says the slow onset of monsoon is also raising concerns over El Nino effect. Thus he adds 7.12 for the benchmark bond yield will be the immediate support zone.
Well, a lot of stock-specific action to track for you, and we'll get to that in just a bit from now in our special Top 10 segment. For the time being, let's run you through the list. We're looking at BPCL, LIC Housing Finance, Delivery, and HCC. Their stocks on the back of positive news flow. While on the flip side, you have IT stocks, Orchid Pharma, SBI Cards, Craftsman Auto, Sansera, as well as ONGC. Their stocks that could be reacting to negative news flow.